Yes, is everyone there? Can I start? Anji guys, everyone's joined. Can I start? Yes. Yes, sir. Okay. ठीक है. Just a minute. Give me a minute. ठीक है. चलिए. Let me just share my screen. Once it is visible, please do let me know. Is my screen visible? Yes. Is my screen visible, guys? But sir, you are not visible. ठीक है. Okay. Coming to the chapter number 1, which is published financial statement. Yesterday was just your revision. Today is your real. I'm starting with the first part of FR, right? So, which is published financial statement. So, a set of published financial statement will have three things. What all will it have? Can someone tell me? Yes. Guys, please answer because my throat is not fine. Yes. But from now on, you'll not call it PL and balance sheet. You're going to call it number 1 statement of financial position, which you used to call as balance sheet. Number 2 is statement of profit or loss, which till now you used to call P&L. Yes. And then there is notes to accounts and other statements. For example, cash flow, etc. Example, cash flow statement, and you can also call it as, you can also have a statement of changes in equity, which is known as SOKI, statement of changes in equity. I'll just mark a star and explain it to you. What is this? Basically, all the movements that are done, right? All the movements in equity are called as, are taken to a statement and they are shown as a separate. So what will be the movements to equity? One could be issue of shares, payment of dividend, then there could be reserves and surplus, right? So then you give a statement of changes in equity. Okay. So you'll give a statement of changes in equity. Please, guys, please take this down. Basically, what happens is, but first you take it down, then I'll take. Guys, when you're done, please do let me know. Nobody will just take a screenshot and get done with it. Please. If I wanted a screenshot, I would have shared it with you. I want you to note it down. Have a habit. These are already computer based exams. I want you, because when you write down things, it goes to your brain. The problem is you used to do it till class 12. You used to have diaries, you used to have homeworks, but now you don't have anything. Once you're done, please do let me know. Done, everyone. We are doing the published financial statements first, which is the first chapter. So don't worry. It's the first chapter that we are doing. Man, we done. Okay. So this I've already told you. Now I wanted to talk to you about how basically accounting happens and how business happens. Very important. To take this, I'll take a T shape, but we have to do the other way around, but I'll take a T shape. If you call this statement of financial position, no, statement of profit or loss, and here you have statement of financial position. Here you have assets, here you have liabilities plus equity, right? Over here you have revenue. So what businesses do is they use the asset, they apply a process to it, a process, people, process plus people, and all this process and people has some cost, right? So they use the asset, which is the economic resources, and they generate something known as revenue, right? Then from these cost and all, when you reduce it, there comes something known as net profits, and net profits will go to equity in the statement of changes in equity. It will add to reserves and surplus. It will be added to the reserves and surplus. Okay. Yes, this is how a business happens. And this is exactly the accounting, financial position, profit or loss. This is exactly how it happens. So asset plus process plus people, that contributes to revenue. From revenue, we get net profit. And then from net profit, we will get reserves and surplus, which will add to the equity shareholders, right? This is the entire business pro forma. This is what happens in a business, okay? If you want to understand what is a P&L account, what is the statement of financial position, what is the cash flow, so this is perfect picture of what happens. Yes, please take it down. Then we'll move on. Done. Chale sir. Moving on. Now this is a pro forma of the statement of financial position, where number one you have assets, under which you have non-current asset and current assets. What are your non-current assets? Property, plant and equipment, intangible assets, and investments. Current asset, inventory, trade and other receivables, cash and cash equivalents. Okay, please take this pro forma, learn this pro forma, just do whatever, but you have to learn this pro forma. This you will not get anywhere. In your examination, you will not get this pro forma anywhere. Hanji, once you note it down, please do let me know so that I can do the other part. Please note down this pro forma. It's very, very important. Okay, can we move on? Done. Next part is the equity and liability. So you saw that T account. Now it's not in process anymore. It's not in any process. Everywhere you will see this account only, vertical format. So equity, ordinary share capital, retained earning, other components of equity, which is OCE. So basically, other components means that if you have some other, say you have a revaluation surplus, you have a revaluation surplus. What is a revaluation surplus? If you revalued land, so you have revaluation surplus. It's not part of your retained earning. It's not part of your equity. It is part of your other components of equity, right? Some other reserve, some other type of a specific reserve. All that is other components of equity. Then you've got non-current liabilities where you have loan notes or long-term loans, long-term loans. Revalued land, suppose you had a land, you bought it for 500,000. Okay. But 10 years later, this land would not be what exactly contributes. No, I'll tell you. 10 years later, if you revalue this land, will it still be 5 lakh rupees? Tell me. Will it still be 5 lakh rupees? No. It would be 50 lakh or 1 crore. So say it goes to 1 crore in 10 years. Then what happens? So there is a difference of 95 lakh or 9.5 million. So where do you take this? This is not your, you can't take this to statement of P&L. So you take it to other components of equity, which is revaluation surplus. The entry that you passed is land to revaluation reserve. Okay, right? Otherwise, your balance sheet will not match. That your land is revalued, but there is nothing in your revalue. I mean, on the equity and liability side, there is nothing. That's why we have other components of equity. Then you've got lease liabilities, deferred taxation. We'll go through it. Don't worry. Lease liability, deferred taxation, trade and other payable. Okay, even current taxation, some error taxation, and then lease liability. So this is has to be, every lease liability has to be bifurcated between short term and long term. So what is short term and long term? Can someone tell me? If you have to pay or receive in next 12 months, it is short term. Remaining is all long. Okay, right? Please. That's why you bifurcate between short term and long term liability. Guys, kindly note this down and then we move on. Please. So basically, what is a lease liability? If you've taken, say, a machine on lease, which is you've taken a machine on long term rent, so it's a lease liability. You have to pay. Okay. Deferred tax, I'll tell you about it. We have a full chapter on deferred tax. Deferred tax is basically, in short, if I want to tell you that the tax you're not paying today. So deferred tax is tax not paying today, but in future the liability will arise. So that's why IFRS say that you have to recognize deferred tax. Okay. Yes. Any other questions? Loan note is basically debentures. Loan note is your debentures. Okay. Loan note is debenture, long-term loan, anything. That's what I've told you. Yes, Akhilesh, you're absolutely right. You're right, Akhilesh. But we have a whole chapter. Basically, it's when your accounting value is different than your tax value, where your accounting value and your tax value don't match for a particular asset. Then there is a deferred tax asset or deferred tax liability. Generally, we take deferred tax as a liability only. Okay. ठीक है. He just defined what is a deferred tax, but don't worry, guys. We have an entire deferred tax chapter. Don't worry. It will come. It will come on its time. Please. Okay. ठीक है. Don't worry. We'll do leases. We'll do taxation, deferred tax, everything. I'm not going to leave out anything. But for now, I'm just trying to go through the format and what is the published financial statement. Please take it down and then confirm. Done. What about others? Manvi, by any chance, are you taking a screenshot? Good. This is the statement of profit or loss and OCI. OCI is other comprehensive income. So OCI, what is OCI? That I'm going to tell you. OCI is other comprehensive income. Don't worry. I will tell you each and everything, but just give me some time. We should type in chat. Yes, you can type in chat. That would be better. If you have a doubt, you can also raise your hand. Okay. Other comprehensive income. So what is this other comprehensive income? Let me explain that to you. So basically what happens is that sometimes there are fair value changes to investments, and investments are recorded through OCI. Some investments are recorded through OCI at fair value through OCI. So the changes in fair value. Suppose you purchased an instrument of an investment for say 95, but between the date of purchase and date of reporting, which is 31st March, 31st December, the change has become 150. The fair value is 150. Now the value of your this thing has increased, but can you take it to P&L? Can you take it to P&L? It's not your real profit. So that's why what we do is we take it to OCI, which is other comprehensive income. Also revaluation reserve, revaluation of land, that is also taken through OCI only. Okay, so the revaluation of land is also done through OCI. For fair value, what are you asking? Can you give a real example for fair? So I just gave it to you. Suppose you have a future and the value of future has changed from 95 to 150, or you have a share and you've recorded it at fair value through P&L. There are three ways through which you can record a financial instrument: fair value through OCI, fair value through P&L, and amortization cost also in case of debt instruments. But if you record it through fair value through OCI, and there is a fair value change, so that cannot go to P&L. It's wrong to take it to P&L. So we take it to OCI. So that is why that is where OCI is used. Till now you've only used SOPL and SOFP, which is balance sheet and P&L. But now we'll all along with this P&L, we'll also make a statement, and this OCI can example revaluation gains that will be taken through OCI. So this OCI can be presented as a separate statement, or it can be included in the SOPL and it can be shown there. Okay. Any doubts? Harsh, clear with OCI? Are you clear with OCI? Yes or no? Harsh, but are you clear with OCI? We'll do it in greater detail, but please repeat if possible. But I've done it twice already. So things that you don't take to P&L, you take to OCI. Any income, any any expenses that you don't take to P&L, to take it to OCI. Okay, we'll talk about OCI in a bit. We have a very detailed explanation of what is an OCI. But you first see there is revenue, cost of sale, distribution cost, admin expenses, profit from operations, finance cost, investment income, then PBT minus income tax expenses, profit for the year. So profit before tax minus income taxes, profit for the year plus OCI, other so example revaluation. Revaluation you can't take through P&L. Harsh, are you there? Beta, are you there? So revaluation you can't take through OCI. You can't take through P&L because you are not getting any money. Just revaluing your land is not giving you any money. Suppose you bought a piece of land for 5 million. You bought a piece of land for 5 million. You revalue it and it is 12 million now. So this 7 million gain, can you take it to P&L? Harsh, bolo. No. So that's why this 7 million gain will be taken to OCI, and this OCI goes to other components of equity and not revaluation reserves and surplus. Not reserves and surplus. Yeah. Right. Is OCI a bit clear? We'll talk more about OCI. We'll do some questions on OCI, but is the concept a bit more clearer? Yes. Okay. Please take this down and we'll continue. See, when I'm telling you not to take screenshot, I'll share the entire notes with you. We will talk about it if the value decreases in future. We'll come to non-current assets. We have an entire IFRS for non-current assets. Don't worry. If the value decreases in future, it has been taken through OCI, then OCI is debited up to the revaluation gain. Beyond revaluation gain, it is taken to P&L. There is an entire this thing. Entire IFRS that we are going to do. Don't worry. Sania, I've told you not to take screenshots. I will give it to you. Don't worry. We'll give this entire thing to you. But I want you guys to note it down. I have these notes. I'll teach from this. Sir, I'm missed writing a few points. Okay. Sir, I have my own notes. You've not attended yesterday's lecture, please watch it. Okay, can we move on? Please take this down as well. Note this, please. Yeah, I'll send you the notes PDF copy. Don't worry. This is all PDF. Once you're done, please tell me. I'll share the PDF with you. Okay, this is the SOKI, statement of changes in equity. So to take what is the opening balance, see what is the prior year adjustment. If there is anything that you've missed and you're adjusting this year, so we will do it in chapter number 8. If there's any prior year adjustment, then we look at the restated balance. Then we come to total comprehensive income. Then issue of share capital, dividends, transfer to retained earning, and then lastly, balance as at 31st March, whatever is the year. Opening balance and then closing balance. Okay. And then you'll make this kind of columns for share capital. So if you have issued share capital, it will come to share capital and share premium, right? If you have, if you've gone to revalue your land or something, it goes to revaluation surplus. Then retained earning, and finally total of equity. Okay. Anji, bolo. Is it fine? Anything you want to ask? Prior year adjustment, will come to it. Will OCI impact the ratios while computing the equity? No. Ratios while computing? I'm not getting your point. What are you trying to ask? Will OCI impact the ratios? No. Only net profit is taken. Are Baba, only PBIT is taken for ROC, not OCI. Okay. You don't take net profit also, na? You take only EBIT. For capital employed, you have Soki. Capital employed is what? Share capital plus loan capital. This is a extra statement that you will prepare now. Till now, you were preparing already balance sheet. So these numbers are there in balance sheet, but this is extra statement that you will prepare. Please note it down quickly, and we can move on, or maybe take a break later on. Anji, can we move on? Okay. Uh, yes, done. Okay, we've got a trial balance and some notes as well. Some notes as well. You have to prepare P&L, OCI, SOKI, and SOFP. Will you do it? Yes. And everyone has to do it on Excel. I'll also do it on Excel only. Okay. Can you do it? Yes, guys. Everyone is going to do it on Excel. Can you do it, guys? You've got this trial balance and you've got this. Please take a screenshot of this notes. Please, when you're done taking screenshot, please tell me when you're done with this screenshot. Yes. Hanji, done. Bolo. There's 5 million revaluation, which will go to OCI. There's depreciation, and then there is the tax charge. And you have this trial balance. Please start making uh, all the financial statements. How much time do you need for this? How much time do you need for this? Yes, how much time do you need for this? Bolo bhai. Guys, mera I'm very my throat is very bad. You're making me speak once, twice, thrice. कितना टाइम लगेगा भाई इसको? 15 मिनट. How much time will you take on an average? बोलो. ठीक है. I'll give you 15 minutes. Please do it, and then I'll do it for you. Okay? I'll do it on Excel, and everyone has to do it on Excel. Please start doing it. 15 minutes I'm giving you. It's 3:54. We'll meet at 4:10. Okay? Yes, done. Which book sir has used asked to use? I have not asked to use any book. I am only teaching from my own notes. But you can use BPP if you want. My notes are from various places. So I've taken the best of everything. If you want that, you can obviously go for this one. Copy this. Okay. Let me start doing it. Anyone who has the answer? Anji, anyone who's still doing it? So anybody who's still doing it? Yes. Fine. I'll start doing it. Give me a minute. ठीक है, I'll start doing it. So number one, we'll prepare statement of profit or loss and other comprehensive income. So first of all, revenue, then cost of sales, how much is the revenue? 95,500. 95,500. Cost of sales is yes. Cost of sales has two things. One is the cost of sale, and second is the depreciation charge. So which is 62561 plus 11250. This is a depreciation charge, right? Which is equal to 62651 plus 11250. Just give me 2 minutes. Give me a minute. Okay. This is equal to 62651 is 11250 and then 73265 plus 62561. 73811. How much is the gross profit? Yes, the gross profit. Yes. Then we have distribution cost and yes, what else? administration expenses, which is one is 5175 and 6560. 5175 and 6560. Right. So how much is the total profit from operations? Yes, is my screen visible to everyone? Bolo bhai. So it is 9954. Then we have finance cost, which is the interest paid. But this is the interest that is paid, not the cost. Interest paid is 600. What interest paid? 600. And investment income. How much is the investment income? Bolo. Interest received plus dividends received, right? Which is 750 plus 150. 750 plus 150. Now, this is the profit before tax. Wait. Deposit, which is 10254. This is profit before tax. Then income tax expense. How much is the income tax? We've got 2290. We have 2290. This is profit after tax. Profit after tax. And then we have other comprehensive income of 5 million. Yes. So we have got total comprehensive. There is a revaluation from 15 to 20 million. Total comprehensive income, which is how much? 7964 plus 5000. 12,12,964. Is that clear, everyone? Follow. How many of you got it right? Then we have statement of changes in equity. Dividend paid. Yeah, dividend paid is not part of P&L. Dividend paid is part of changes in equity. It is dividend is not your expense. No, dividend is not your expense. It's part of equity. Yes, dividend will be deducted. I'll just make the statement of changes in equity. share capital, share premium, retained earnings, retained earnings, then revaluation surplus, and then total equity. So number one, balance as at 1st of Jan X2 20. How much the share capital? Bolo. 15,000. Share premium, लो भाई, 2,000. 2,000. Retained earnings, 5,175. Revaluation surplus, 5,000. Total equity is the sum of all of these. Okay. Then what has changed? There are two things. So total comprehensive income, and out of this there are two things. One is OCI, so 5,000 goes to OCI, and the other part goes to retained earnings. 7,964. Then sir, dividends, retained earnings. How much is the dividend? 650. We'll reduce it from retained earning. Let's copy and paste this. Then we've got balance as at 31st December 20x2, which is equal to sum of. Get it? Is this clear? Yes. Is that clear, guys? You want to copy this? Please copy this. Please copy it quickly. Give me 2 minutes. Let's get some warm. Hanji. Then copying this, let's make the final statement of financial position. Statement of financial position, non-current assets, PP, property, plant, equipment. This is 34765 plus minus 11250 plus 5000. Okay. So 28515. Then we have current assets. Current asset is inventory, receivables, investments. 7516, 18, and then 6500 total of okay. Then you've got equity, share capital, share premium, retained earning, revaluation surplus, which is 15,000. I'll just link it, right? Just link it to these 15,000, 2,000, and retained earning is 12489, and revaluation surplus is 10,000. So we know the total. Then non-current liabilities. Yes. Only one 6% loan. Yes. Please one. Which one did I add and deduct? From Soki. From Soki. Three four seven six five is the number given to you already. 34765 plus 5,000, which is the revaluation surplus, minus 11,250, which is depreciation. Got it? Yes. 6% loan, 10,000. Then current liabilities, payables, taxation, and bank. 8675. So If you look at bank is in overdraft. That's why it is given as credit, right? So there is no bank balance in debit. So there is an overdraft balance. Taxation is 2290. Again, I'll link it. And then bank is 750. Now we can do a total. 61204. Is this clear? Want to take it down? Yes. Kanji, you want to copy this? Yes or no? Yes, please copy this. And after that, we'll take a 15 minutes break. Be back in 15 minutes. Okay. Thank you, guys. Then we'll do the next question. Okay. Thank you so much, guys. Chaliye. Let us come back to it. Anji, are you guys back? Yes. Anji, is everyone back? Okay. So another question we'll do. Can you see the question? Yes. Okay. I just put it on Excel. Okay. So another question you have. So you've got a set of trial balance and you've got some additional information around 7 points. Inventory, buildings, no purchase sales of non-current asset, depreciation, income taxes, 10% loan note. So sixth point is a catch. Let's see how many of you are able to do it correctly. I'll do it, but I want to see how many of you are able to do it correctly. Because there is interest paid also, and then there is this point also. Because 10% loan note at 80,000 is 8. And if you look at interest paid, it's only 5. There is outstanding interest. I've given you the hint. Year-end provision. Okay, please start doing this. I'm giving you 15 minutes. Please do it and then we'll discuss.
एक्सक्यूज मी सर
हाँ जी.
सर हमें ये एग्जाम में अपने एक्सेल शीट पे करना होगा
Yes. अपने Excel sheet पे नहीं.
मतलब
They'll
उनके
give you a CB platform where there will be Excel functionality. You'll have to do it on Excel only.
so that's why we are practicing on Excel right now.
Absolutely.
Okay,
Absolutely.
thank you.
हाँ जी, हुआ किसी का? बोलो. Sir, we are done. There is one person, Manvi. Only Manvi is done. Yes. What about the others? We are done. How many of you are doing the question? Yes. How many are doing the question? So I'll just make the statement of profit or loss and statement of financial position. You will make the statement of changes in equity. Statement of profit or loss. Okay. Number one, revenue is how much? 1300. Cost of sales. So in cost of sales, you have to take 470 plus so we'll make a working note here. We'll make a working note. We'll take land, buildings, plant and machinery, and then a total. So first of all, what is the cost for each one of them? Cost brought forward is how much? So land is 110, buildings is 100,000. Then plant and machinery is 125. We'll do a total. These three, 335. Depreciation, accumulated depreciation. How much is accumulated depreciation? बोलो भाई. 48. Land, on land there is no depreciation. 48 building and 75 is plant and machinery. Yes. Sum it up. 123. Then we have depreciation. Depreciation rates are given 60%. That is apportionment. Depreciation buildings 5%, plant machinery 20%. So 5%, and then 5% of cost of machine. And plant and machinery is straight line value, so 20%. $25. Do a total and then come to carrying amount. To 182. So in cost of sales, we have 470 470 plus we also have depreciation. So it's given that cost of sales depreciation is 60%. So 60% of 30 is the total depreciation plus okay, also we have closing inventory. So inventory is 250,000. So we'll just reduce the closing inventory minus 250. Is there any doubt? Why am I doing this?
Sir, opening inventory is also given.
Yes. So I'll add 150. Right. Now I'll just copy this. So is this the cost of sales? Yes, sir, please explain deeply. Okay. So what all are you going to take in cost of sale? First of all, purchases. Yes. So we have 470 purchases. Yes. Yes or no? We have 470 of purchase. Then we have depreciation. It's given that depreciation charges are to be apportioned 60% of cost of sale. What is total depreciation? 30. So 30 into 60%. Okay. Yes or no? Yes. Minus 250 plus 150. So you take add opening balance minus closing balance. So 250 is the closing balance, which is given to in notes to accounts. Additional information 250. And opening balance is also given. Yes. Yes or no? Inventory as at 1st April 20x8. That is 150. Can you see this? Okay. Is that clear? Everyone. So minus 250 plus 150. Yes. So minus 150 minus 250 is the closing inventory and plus 150 is the opening inventory. Yes. Is that clear? So we've got gross profit 1300 minus 388, that is 912. Then we have distribution, administration, and how much is distribution and administration? Also, you need to add the depreciation allocation. So 20% plus distribution cost is already given. So 246 is 240 plus 6, which is 30% of depreciation, 20% of depreciation. No. Yes. 20% of depreciation? Yes or no? Is this clear? Very good. Then we have administration, which is 170 and plus 6. Yes. 170 plus 6. Yes, this is clear. You take that 170 plus 6 and you have profit from operations. 842. Is this clear? Hmm. Administration also, there is one thing. There is year-end provision for warranty claims, which is an estimated 75,000. Warranty costs are charged to administrative expenses. So we'll add 170 plus 6 plus, yes, how much? Bolo. The opening warranty is, the opening provision is 90. So what we'll do is, we'll take the difference, which is 90 minus plus 90 minus 75. Okay. $170 plus 6. So, okay, provision is reduced. So it has to be 75 plus 90. So 191. Wait, no. Minus 90. 75 minus 161. Right? Yes, is that clear? So what we have done here is, we had 170 already given plus 20% of 30, and there's a reduction of warranty. So we'll reduce 15. Okay. Warranty provision has reduced. So we'll need to reduce it from the cost. Okay. Yes, is that clear? And we come to
Sir, are we
profit.
starting from section C?
Section C? No. Section C of what?
Section C of the paper pattern.
No, yaar, this is the basic. Yes, I'm just telling you the basic. Because going forward, you might have to make a lot of these balance sheets. I'm telling you the basics.
Okay, sir.
Okay, this is not section C of the paper. Profit from operations? Yes. Is this clear? Bolo. This is the
Sir,
basic.
hi sir, can you please explain the depreciation part?
See, depreciation we have made one
No,
working
sir,
note.
not for the PP and land and building. I just want to for the cost of sales and administration.
So they have already given you a working note. What are they saying? That depreciation is apportioned to cost of sales 60%, distribution cost 20%, admin expenses 20%. That's what we are doing. 60%, 20%, distribution also 20%. Okay. 240 plus 6%. This is 240 plus 6% of 30. Okay. Clear? Bolo. Depreciation is 30 total for the year.
Yes, sir. Yes, sir. Clear, clear. Thank you.
So when you are asking a question and I explain it and then it's clear, please tell me, because then I'm stuck over there. Okay.
Yeah, sir. Sure.
Profit from operations. Anyone, any doubts? This is just we are making a pro forma. That's it. No doubts. No doubts? Can I have a quick yes or no? Everyone, can I have a quick yes or no? Then we have finance cost. How much is the finance cost? It's given that you're paying interest 5, but you have a loan note of 80 and 10% of that is 8. So your finance cost is 8, right? Now we come to profit before tax. Profit before tax. How much is the income tax? So if I look at the income tax, they've given income tax is 10 and so this is the remaining balance from previous year. For this year, the income tax is given to you 1,35,000. So 135 plus 10. 135 plus 10. 145 minus 1. 497 minus 145. Okay. This is the profit for the year. ठीक है, यहाँ तक क्लियर है?
Yes, sir.
बोलो भाई. Income tax is how much? Sir, 135 plus 10. बोलो, यहाँ तक क्लियर है? Finance cost अभी explain किया था उमा. Finance cost, it's given that you've paid 5 interest. But how much is the total finance cost? It is 10% of the loan note. The total loan note is 80. So 10% of 80 is Uma. Right? So 10% of 80 is profit for the year. Anyone? Any doubts? Anybody has doubts? Please tell me. Can I have a quick yes or no? Statement of financial position we'll make in the next class. So this is it for now. I'll see you next time. Till then, bye-bye. Take care. Namaskar. Anyone wants to copy this? Anybody wants to copy this? ठीक है. I'll share this Excel. Okay, guys. Thank you so much. I'll see you next time. Till then, bye-bye. Take care. Namaskar. Thank you so much, guys.
Thank you, sir.
Class recordings most probably by tomorrow. Bye-bye. Thank you, guys.